All right, welcome back. We've got our Tariff Talk segment of the week. Big day today in the stock market, a lot of volatility, and this is following the new tariff announcements. I'm not going to dive into these numbers too much because there was a lot that was announced yesterday, and you could probably spend a whole week diving into the numbers, but I'll keep it short and sweet here. These tariffs were much worse than I think anyone expected, and that's why the market is reacting the way it is. These are much higher numbers than I thought were even a possibility. And there's a lot of exemptions on certain items, and there's just a lot of details to these tariffs. But it's causing a lot of market reactions here. We're going to look at some of the charts in just a moment. And these tariffs are obviously going to affect the different types of businesses depending on where they make their products, where they source their supplies from, and where they sell their products. So there's a lot of moving pieces, and every business is going to be affected differently. So some businesses are going to be hit harder, and I think every business is sitting there looking around saying, how is this going to affect us? They don't really know until these are put in place and they see the changes in their day-to-day business. So this is causing a lot of uncertainty, and we're seeing the investor sentiment devolve even faster. So what could be coming up next? Retaliation tariffs, more deals. Who knows? There's going to be a lot more news coming out. This is only day one after the announcements. So let's go ahead and take a look at some of the charts. We'll pull up a heat map, a blood map. This is just today. So you see every technology, electronics, semiconductors, retail, manufacturing, energy, everything. You've got some safety here in healthcare, communications, and non-durable goods. So this is a very risk-off market. Now, we are seeing crude oil drop. Let's pull up crude oil. Crude oil down 7%. Some of that is OPEC is increasing the amount that they're putting in the market, so the amount of oil that they're putting into the market. The Russell 2000 down almost 7%. 7% will trigger the circuit breaker to where they stop trading. Exciting. NASDAQ down 5% and dropping. We're almost near our daily lows. S&P down 4.5%. Dow Jones 3.75. You've got gold holding up here pretty well. Bitcoin holding up pretty well. It's just a matter of time. I think we have a high likelihood for a crypto sell-off this weekend as people just look for any liquidity they can find. You've got the dollar dropping, and the big news here is you've got yields making a big move to the downside. 10-year yield is almost at under 4%. The 2-year yield is down 3.3% today. So that's going to be good for mortgages. That's going to be good for car loans. That's going to be good for any sort of lending. The catch-22 here is these signals are telling us the likelihood of recession is drastically increasing, and the market is going really risk off, selling stocks, buying bonds. So even if the interest rates are low, are the banks going to be wanting to lend in a potential recessionary environment? That's the catch-22. Let's take a look at some stocks. Amazon down 9%. Amazon was almost $200 yesterday, and now we're down to 178. You've got Nvidia 102. My next buy point on Nvidia is 95. We're getting pretty close there. Tesla down 6%. You've got the Qs that are down 5%. Google down almost 4%. Costco holding up pretty good here. Chipotle is down 3%. Shopify down 19%. Garmin is down 15%. Meta down almost 9%. The SMH, we've talked about this. This is the canary in the coal mine. This does not look good. This was the leader on the way up in the recent bull market, and this may be the leader on the way down in this market sell-off, or it has been. Uber down 6%. You've got Target 11.5% down. Occidental Petroleum down 11%. You've got Chevron 4.5%. Let's find Apple. Where's Apple? You got Broadcom down 10%, another great semiconductor company. Apple may close down 10% today. That may be nearly a $300 billion loss on the day for just Apple. $300 billion. We're getting close to that. So I can go on and on here. ASML, a phenomenal semiconductor fab or manufacturer. They make the machines that make the chips. Down 6.5%. Oracle, cloud computing, down 6%. Microsoft actually holding up pretty well here, only 2%. You've got Home Depot down 4%. So a lot of just selling across the board here, and doesn't look too good. Intel, the big winner today, up 3.5%. Who would have thought? So pretty red day today. Now, this is not financial advice, but my strategy has not changed. I have been doing a little bit of buying this week. Bought some S&P 500, some Nvidia, some Amazon, and that's it. Amazon's been my biggest buy. I have been nibbling quite a bit on some Amazon, and I still have my shopping list. I'm sticking to it, and I'm spacing out my buys. And sure, if I bought yesterday and Amazon's down 9% today, it doesn't feel great, but the risk of buying too early is that you have a temporary loss. So if I buy Amazon at 190 and now it's 180, yeah, I'm in the red, but I'm going to continue to buy. I have my targets set out. I'm sticking to my plan. I have income that I'm going to be continuing to put into my stock market portfolio. So as long as those conditions are the same, I'm going to keep buying. Obviously, if your income changes or if an expense comes up, a medical emergency, you're not going to be buying stocks in the downtrend. But when I see big moves to the downside like this, I get more excited than I do sad, because I'm a young investor. I've got 30, 40 years for these investments to pay off, and I have no doubt in my mind that in 10 years, Amazon's going to be higher than 180. So if I buy Amazon at 180, 190, 200, I know in my mind that the likelihood of Amazon in 10 years being much higher than that is very high. So I'm not too concerned about 5 years ago, did I buy Tesla at $30 or $50? It doesn't matter. It's $300 or $260, whatever it is now. So there's a temporary pain if you buy too early, but we can't perfectly time the bottom. If I have $100,000, what are the odds that I'm going to bottom ticket and put all my money in at the very bottom of the market? Nobody knows when the bottom is. For all we know, they could have came out yesterday and said, we're not going to do any tariffs. In fact, we're going to give lollipops out to everybody, and the stock market rips. If you haven't been buying, you missed out on that move up. Obviously, that's not the case, but nobody knows what is going to happen for the stock market. So we've talked about in the past the S&P, when it gets down 15%, the likelihood of a bear market increases drastically, and we are getting closer to that 15%. We are currently down about, I think, 11.5%, maybe 12%. 11.5%. So we're getting close to that 15% mark. But again, to me, the big fear is, are we entering in a recession? Are we in a recession? We get the GDP numbers at the end of April. We may get the first read of negative growth for the quarter. We'll have to wait and see. So that's all I got for this video. Not a whole lot to do on a day like today. And we will see what the rest of the month brings, but not such a great start to Q2 after a very bloody Q1. So everyone get your helmets on and stick to your plan, and that's all you can do. All right, everybody, I will do a wrap-up video tomorrow, and I will see you all then. All right, peace out.